as wildfires now rip through thousands of acres of California real estate on the heels of record-setting destruction last year. A unique financial strategy to prevent such fires is underway in nearby Tahoe National Forest. A bond that provides immediate, much-needed funding for fast restoration of the now overly dense, dry, and dangerous forest.
I see a beautiful forest in front of me. What do you see out there?
It is strikingly beautiful, but what we really have right now is an overstocked forest.
Zach Knight is managing partner of the nonprofit Blue Forest Conservation and the brains behind the first-of-its-kind bond.
It's really a public-private partnership where we've engaged investors like pension plans, insurance companies to help cover the upfront costs of doing this much-needed forest restoration work with the primary goal of reducing the risk of catastrophic wildfire.
Here's how it works. Investors buy into the bond, in this case, a $4 million loan held by Blue Forest. It gives the money to contractors who do the forest thinning. Investors are then paid back over 5 years with 4% interest by those who benefit from the work and have contracted with Blue Forest, like the Forest Service, state agencies, and Yuba Water, whose reservoirs receive water from the forest.
There's about 300,000 acres upstream of our reservoir here that our water comes from, and we care about the quality and quantity of that water from the forest.
Willie Whittlesey says it's worth it for Yuba to pay investors back a little more over time because of the invaluable benefit of getting the work done now.
The need for funds is immediate. We have a longer summer season or a shorter wet season, and we have significant north winds that are an effect of climate change. We need to do something now.
Yuba can't rely on funds from the Forest Service anymore because the service is now spending more than half its budget fighting fires, and climate change could push that higher.
It creates this vicious cycle where we're spending all this money to fight fires, and that takes money away from the preventative work that could stop those fires in the first place.
The driving force behind this is an increasingly popular type of investing called ESG, environmental, social, and corporate governance. It's investing for the greater good, in this case, buying into the health of the forest, but still making money.
Our investors are looking for an impact and a financial return, and this is off the charts when you look at what it's giving back.
Jennifer Price says her investors want to align their capital with their values, and fighting the effects of climate change is #1 on their agenda.
It's a little bit harder, I do find, for people to buy into at times, preventing rather than mitigating and taking it away or stopping, but we're preventing it from even happening.
The greatest risk, she says, is if they don't do more bonds like this one.
Because if this transaction isn't replicated or there isn't other funds allocated to do the forest clearing, the forest fires can still rage.
Now, Blue Forest is expecting to launch the next fire bond, an even larger one, in the second quarter of next year. Demand has been very strong. In fact, an article about this bond was just published as part of research at the Federal Reserve Bank of San Francisco leading up to the Fed's first ever climate change conference, which is scheduled for next week. Huge news, guys.
We're talking about a fire bond and we're talking about forestry right now. I wonder if a bond offering like this is something that could be applied to some of the other resiliency or infrastructure projects when it comes to natural disasters like flooding.
Absolutely. You look at cities like Miami, New York City, pouring tons of money into flood resistance, flood resilience. You can use a bond like this for all kinds of projects. And in fact, that's what the folks at Blue Forest Conservation are planning to do. They want to get this well known. They want to get it out there and apply it to all types of resilience.
When it comes to risks, are real estate people talking more about fires or floods as long-term damaging risks, trends?
Well, right now they're talking about fires,
Obviously.
But when you talk about floods, floods actually cause much, much more real estate damage. They're much more widespread, and so that's where a lot of the money has to go in. But for Californians, of course, that's what they think about.
I still remember your piece about the home that would not ignite.
Right.
Yes.
And in fact, you wish you had more of those out there. In fact, that was from the insurance industry. Now, the insurance, of course, paying a lot into California fires. And in fact, for this bond, they're looking to get insurance companies to be some of the payers on this bond as well.
Given the fact that you watch real estate as closely as you do, have we seen an impact, for example, in California with the fires, have we seen an impact on home prices and also insurance rates?
Absolutely. Absolutely. I mean, you're seeing insurance rates go up. You're seeing people whose policies are canceled. And you're seeing people who want to move out of the state because of this. So in those fire areas, of course, you're seeing property values goes down, just as you are in flood-prone areas on the East Coast here.
Diana, great work for our viewers out there. I mean, rising risks. You can find out more about the work and the stories that Diana's been collecting on CNBC.com. It's really worth a look.